Hi, and after a brief hiatus, welcome back to our weekly videos where we take a look at some of the major news stories that affect the market so far. And this week we're going to take a look at the S&P setting a record new high. We'll take a look at a little bit of pressure on the dollar, see what might be driving that. Thirdly, we're going to take a look at Brent Crude oil ahead of a major meeting at the end of this week. And we'll finish off by taking a look at Black Friday, what impact that may or may not have on the stock markets. So we'll start with the SP 500. Earlier this week, we reported that the SP 500 has hit a record new high, surpassing its levels in the previous high on November the 11th of this year. Now, bullish sentiment in Wall Street is driven predominantly by the announcement that Donald Trump has selected Scott Bessent, a renowned investor and hedge fund manager, to be his Treasury Secretary. Now, if we take a look at the chart, that's the US SPX 500 Mini, as we call it at FXOpen, that shows us that the price is moving within two ascending channels. We can see the medium-term blue channel, framed in blue, that began back in August. But we can also see a shorter-term, steeper channel, as marked with black lines, which has pushed the price from the lower half of the blue channel into the upper half of said blue channel. Drill down a little bit further, we take a look at the decline from B to C that you can see marked on the chart. That's retraced approximately 50% of the rise of A to B. However, there are a couple of bearish factors that warrant our attention. The rising CBOE skew index. Now, Reuters reports an increase in this index, which is a tool that reflects upon investor caution, and the concerns may stem from potential inflation spikes, Donald Trump's tariffs that are being talked about, and other risks. There's a possible false breakout as well. The chart indicates that after setting a new high, the price turned downward. We can see that with a red arrow, potentially signaling a false bullish breakout of the previous high. So a little bit of mixed messaging in there. Other factors are going to come into play in the next few days, but certainly don't forget your risk management techniques. But it's another high for the S&P 500. Okay, now we're going to turn our attention to the US dollar, and that's been declining this week following some weak macroeconomic data. Now, the final week of November is potentially shaping up to be the dollar's worst week of the month. That's all off the back and following the release of Chicago PMI data and the US Q3 GDP report. The dollar against the Japanese yen and the dollar against the Canadian dollar have fallen to some key support levels. So let's drill down. Let's have a look at the dollar against the Japanese yen. A retest of the critical resistance level at 156.00 proved decisive for the dollar yen buyers. The rejection from this level confirmed the previously formed bearish engulfing pattern and led to losses in excess of 400 pips. Wednesday, the price fell below the 152.00 to 151.50 range, which had initiated the pair's rally after Donald Trump's election win. Now, in upcoming sessions, this range may well be retested, but quite possibly now as resistance. If the buyers fail to hold above 152, a further downtrend toward 150 to 149 range is possible. But there is some data coming out that could well impact the trajectory of this pair. Thursday at 5 p.m, that's GMT +3, as are all of the times I'm going to speak about, the Dallas Fed Personal Consumption Expenditures, or PCE, figures are released. Friday at 02:50 a.m, again GMT +3, the Japanese industrial production data comes out. And also on Friday, 5:45 p.m, we've got the Chicago PMI report. All of those could shape the trajectory in the coming days, so keep your eyes and ears open for them. Also, let's take a look at the US dollar against the Canadian dollar. At the start of the week, US dollar CAD buyers pushed the pair sharply higher, breaking the recent highs at 1.41. However, after rising to 1.4180, a correction to 1.40 occurred, forming a bearish harami candlestick pattern. Now, TA suggests a potential for a full-fledged downward correction if the 1.4060 to 1.4020 range confirms its role as resistance. But also some important figures coming out that we need to take note of. They could have some significant impact. Thursday, 4 p.m, again, it's GMT +3. We've got Canada's current account balance. Friday, 4:30 p.m, we've got Canada's Q3 GDP report. And Friday at 7 p.m, we've got Canada's September budget balance. All of these could well have an impact. So don't forget your stop losses, your risk management techniques, and let's have a look at what impact they can have in the coming days. So now we're going to take a look at the Brent Crude price ahead of the OPEC Plus meeting on the 1st of December, and the price seems to be consolidating slightly. Now, the ATR indicator, the average true range indicator, on the XBR USD chart has dropped to its lowest level since early autumn. That's signalling reduced volatility. That's likely due to market participants awaiting the announcements from that OPEC Plus meeting on the 1st of December. As ever with these meetings, and we talk about potential cuts in supply, etc., it can have quite a significant impact. Now, overall, the Brent crude price remains under pressure. That's due to reduced tensions in the Middle East, with reports this week and an agreement of a ceasefire between Israel and Hezbollah. Obviously, reducing tensions reduces the price. There's also news of an increase of crude oil inventories in the United States, and there are also forecasts of slower oil demand growth from China in 2025. All of those combined will put a little bit of downward pressure on that price. Now, on the other hand, the $70 to $71 range serves as strong support, marked by key lows from 2023 through to 2024. Now, from a TA perspective, the price fluctuations are forming a pattern resembling Andrew's pitchfork, although it's not an exact match. And don't forget, if I talk about some of the indicators you're not sure, take a look on our website. You can find some in-depth explanations for them. Anyway, back to this now. Key observations. On the chart, we've got central line has shifted from support to resistance, as indicated by the arrows that you can see. And that lower line is preventing the price from breaking the year's lows. So I think it's fair to say that all eyes really are on the OPEC Plus meeting on the 1st of December. And if that brings no surprises, the period of reduced volatility may persist, with the price continuing to fluctuate within this range. But that's if there are no surprises. Nobody's ever quite sure with these meetings and what some of the major players will do. So it's going to be important. And again, keep your eyes and ears open, and it'll be important to use your risk management techniques. Okay, and finally this week, we're going to take a look at something slightly different, and that's Black Friday, which is coming up. Lots and lots of people like to get their bargains in on Black Friday. But how can Black Friday impact the stock market? Well, it's this week. It's Friday this week, and it's considered an early indication of the success of the Christmas shopping season in the United States, and can serve as a trigger for the so-called Santa rally that takes place typically late December through to early January. If we look at it from a fundamental analysis perspective, according to the Federal Reserve Bank of St. Louis, consumer spending accounts for approximately 70% of US gross domestic product. So we can see how important it is. Thus, Black Friday's sales figures are often seen as a vital indicator of the nation's economic health. Now, this year we've got added importance, as it could well influence the Fed's future monetary policy direction and the cycle of rate cuts. So, stock market impact. Well, if we look at it historically, it's difficult to see a consistent annual pattern due to a number of factors. However, retail stocks often display some discernible trends during that period of time. Historically, between 2013 and 2023, the retail sector outperformed the SP500 in late November. So if you like, just before Black Friday, or just on the verge of Black Friday. From 2007 to 2017, certain retail stocks deliver returns of up to 5% against an index average of 3%. And we see a chart there that shows a comparison between the US S&P X500 Mini and Walmart. And we see they don't always flow together, so to speak. So what happened last year? Well, Black Friday in 2023, according to the National Retail Federation, or NRF, approximately 200 million people shopped on Black Friday, with an average of $321.41 spent per person, which was a record, all-time record. And in fact, major online retailers benefited as more consumers opted for e-commerce, which of course, when we think about the size of some of these companies, could be quite important for the markets. So what about this year? Well, what will 2024 bring us? NRF forecasts suggest that 34% of Americans will shop on Black Friday. Spending is expected to reach another record high, with some forecasts saying a 3% increase on 2023. And in fact, 71% of consumers surveyed by Deloitte indicated that they plan to shop online. However, each year we have to consider that there are many other factors, and this year, for example, including unique political and economic factors, which make it difficult to analyse market behaviour around Black Friday, and certainly this year with the election and everything else that's going on in the world. But it is certainly going to be noticed and is going to be looked at to give an indication of how healthy the US economy is. So enjoy your shopping if you're doing some, and we wish you luck with your trading in the week ahead. Bye for now.